18th meeting of the G20, which takes place in Delhi, India, on the 9th and 10th of September, may bag a lot of the macroeconomic headlines in the coming week. But before then, we will get two central bank policy decisions which may well be worth following. Some monetary authorities, though not our own Bank of England, are starting to slow down the pace of interest rate increases or even pause on them. One or two emerging market central banks, notably the Banco do Brasil and the Banco Central de Chile, are even starting to cut headline borrowing costs to embark upon a new loosening cycle. Now, emerging market central banks move to tighten first, so it's reasonable to expect them to be the first to loosen too, but both the Reserve Bank of Australia and the Bank of Canada did nothing at their last meetings. So each authority will be under the microscope this time, as investors look ahead then to decisions from the European Central Bank on the 14th, US Federal Reserve on the 20th, and Bank of England on the 21st of September. On Tuesday the 5th, the Reserve Bank of Australia will make its decision at what will be Governor Philip Lowe's last meeting in charge. His 7-year term is ending, and he's not been reappointed, some would say sacked. His deputy, Michelle Bullock, will take over later this month after criticism and an independent review of the Reserve Bank of Australia's workings, especially in view of how rapid interest rate increases have taken a toll on the Aussie housing market. The RBA left rates unchanged now for 2 meetings in a row at 4.1%, and economists think it may do the same again this time and go for the hat-trick. On the 6th of September, attention will then switch from Sydney to Ottawa, when the Bank of Canada will make its latest announcement. Governor Tiff Macklem is midway through his 7-year term and faces the same challenge as Mr. Lowe and other policymakers, namely juggling inflation on one hand, economic growth on the other, all while keeping an eye on wider financial market stability at the same time. The Bank of Canada paused on rates in March and April, but hiked by a quarter point at each of its June and July meetings to take its headline overnight rate to 5%. The current consensus is that Mr. Macklem and colleagues will hike rates again this time to 5.25%, but then that will be that, and that will be the peak. Meanwhile, the pace of corporate news is picking up as we ease our way into autumn, and there's a busy slate of releases due from large, mid, and small cap firms. Names which may be worthy of further study include the following, although some of these dates could yet be subject to change. Beaver on Monday the 4th of September, DS Smith, STV, Craneware, Johnson Service, Michelmersh Brick and Midwich on the 5th, Barrett Developments, WH Smith, Darktrace, Halfords, Restaurant Group and Enquest on the 6th, Melrose Industries, Beasley, Direct Line, Currys, Hilton Food, Funding Circle and Playtech on the 7th, and Barclay, IQE and Computer Centre will round out the week on Friday the 8th. Even allowing for that lengthy list, the company most likely to cause a fuss in the week ahead is Ashtead. The FTSE 100 member is scheduled to release a first quarter update on Tuesday the 5th of September. Now, shares in the plant and equipment hire specialist are yet to recapture their peak of 2021, but they are up by a quarter over the past year nevertheless, as markets convince themselves that America's economy will dodge a soft landing or even a hard one and keep on growing. Remember, Ashtead gets around 85% of its sales and 90% of its profits from its American Sunbelt operation, with a bulk of the rest coming from Canada and the A-plant business in the UK. This could make the company a particularly good litmus test for the US economy, even as it continues to take market share and supplement its organic growth with acquisitions. The share price does look a bit brighter, it must be said, than the underlying economic data, at least judging by the Institute for Supply Management Purchasing Managers Index, or PMI, for the manufacturing industry. A cooler housing market could also run counter to the share price, at least if the US National Association of House Builders Index is any guide. For all of that, Ashtead spent all of its fiscal year to April 2023 raising sales growth and earnings guidance, not lowering it. This has helped the share price, and it's by the guidance for the year to April 2024 that these first quarter updates will be measured. Now, Chief Executive Brendan Horgan offered guidance for fiscal 2024 of organic sales growth of 13 to 16% when he published the full year numbers, and that was based upon expectations of increases of 15 to 20% in Canada, 13 to 16% in America, and even 10 to 13% in the UK. Analysts currently expect total sales growth for the year of 13% to $11 billion. The benchmark for the first quarter is last year's figure, and that's $2.3 billion. Ashtead will also publish a pre-tax profit figure. For fiscal 2024 overall, analysts are looking for a 14% advance to $2.5 billion. The first quarter benchmark figure from a year ago, well, that is $527 million. Ashtead is not likely to talk about its dividend at the first quarter stage, although analysts do expect the firm to extend its streak of annual dividend increases that goes all the way back to 2005. Note that the firm's also running a share buyback and has a current capital expenditure budget for fiscal 2024 between $3.9 and $4.3 billion. That compares to $3.8 billion last year. Generally speaking, the more optimistic Ashtead's managers are, the more kit they'll buy, so the more they can hire out. Finally, analysts will keep an eye on acquisitions, where Ashtead uses smaller bolt-on deals to supplement its organic momentum. The firm spent $1.2 billion on 50 bolt-on deals in 2023. I hope that you and your families are keeping well. Thank you for watching, and I look forward to seeing you again next time.